Hi everybody, this is Patrick McGuire from the North Shores Real Estate Group, and I want to bring you another investment property today. This is 31 Chapman Street in Beverly, Mass. There actually was just a broker open here this morning, and it's probably off the market already. I know there's at least one offer by us and probably more coming in. It's a great little property, and I wanted to be our first multi they had up in the investment group. I just going to show you what's available out there. This is in Beverly, close to downtown. What you can see is this is a 3-unit building. All 3 units have 2 bedrooms, which is great. Really kicks up the rent. They have it written down as $13.15, $13.50, $11.50, $11.25. These are probably just about right. Average for a 2-bedroom in Beverly is about $1,200, and we can check that here with our rentometer. I put in $1,200 for Beverly, and it says this is right on the nose, right in the middle. This is a site that's used by renters to see if they're getting a good rent or a bad rent. But we can check to make sure we're right in the middle, make sure it's a good rent for the area, and it comes out that it does. So with those kinds of rents, this property really cash flows well, and we can kind of go over to our case study calculator and look at that here. As you can see, I have it just as a purchase price. This is their asking price and a down payment of 30%. Usually with investment property, you're looking at about like at least 25% to 30%. So I just went with 30. Closing cost about $8,000. Mortgage rate 4.5. Still got those great rates. And appreciation rate, I want to keep it a little bit low at 2%. Historical average 3%. We want to be a little conservative over the last couple of years. We'll just put it at 2% there. And you can see as we go through here the equity building in the property. This is a 15-year mortgage, so after 15 years your mortgage is totally gone, totally paid for by your renters, and now you have an equity of about $530,000. And down here we can see the cash flow over time. This cash flows from year 1. With the 15-year mortgage, it starts at $7,500, and then after that 15-year mortgage, you come in at $53,000 a year. And how do we get that number? We look over here. This is the rents added up on an annual basis. That $43,500. Vacancy rate of about 5%, which is typical for the area. Operating expenses, I put it at about $8,000. We have the property taxes that came from MLS. We have the insurance at $2,000, which might be a little high. We want to be conservative. And the maintenance fees about $1,000, and other if necessary. You might have some commissions, or you wouldn't have utilities. They all have their separate boxes. Push those onto the renters. You might have some commissions, maintenance fees, depending on if you had a property management company taking care of the property, or if you did it yourself. I did the annual rent increases of 3%, which is usual, and I had our expenses at 2% increase just to be on the conservative side and make sure that these numbers aren't atypical. And it really comes in at that. And you can see that the rate of return starts high and ends high. It gets up to about 18% here, 19%, and then kind of steadies off and declines just a little bit. If we want to see what we would get as a rate of return depending on our estimated percent down, I did that 30%, which gets you about $7,000 in the first year. Cash on cash return of 5.79%, and what a cash on cash return is the annual cash flow divided by that amount that you have put down. But as you can see, the more that you put down, the more cash on cash return you get right off the beginning. If you pay the whole thing down, you start off right as an 8.12%, which is about the capitalization rate, your return rate on that property. So I just want to show you this one real quick. And this is 31 Chapman Street in Beverly, Mass. It's probably already gone by tomorrow morning. We kind of get an idea of what's out there, the opportunities that are out there, and what can be had for the money. All right, see you guys next time.